This is your LMAX exchange technical update for Thursday, August 3rd, 2017. Eurodollar. So the euro continues to extend its run of 2017 highs, with the market accelerating following a recent break below some resistance that was in place at 117.15. That was a range high from 2015. And so we've seen this breakout to the top side. But again, on a short-term basis, daily studies are overbought, which does warn that we could soon see some form of a meaningful pullback before the market even considers the possibility of continuing to extend this run. The market is now traded up above 119, which does open the door for the possible test of a psychological barrier at 120, but it looks like additional upside right now should be hard to come by, with the market instead seen stalling out in the sessions ahead and reversing lower. Look for a daily close now back below 117.85 to strengthen the case for some form of a short-term top at a minimum, opening the door for a potential corrective pullback that takes the market back down into the 113 to 115 area. Sterling dollar. So cable continues to squeak out fresh 2017 highs, though the gains have not been that impressive considering, and the market could still be poised for some form of a corrective decline over the coming sessions. Look for the market to put in a close back below 132 to strengthen this outlook and opening the door for additional declines over the coming sessions back down towards and below 130. Overall, the structure here is quite constructive on a medium to longer term basis since breaking above 127.75 back in April of 2017. But again, with markets extending a little bit here, there is risk for a corrective pullback and some consolidation before that next push higher and a higher low towards the measured move extension, which comes in at 135. That 135 extension comes off of following a period of consolidation that we had seen from that plus 30-year low from 2016 up to that range resistance. So the breakout of that major range does project a move towards 135, but it is possible again that the market sees a bit of a pullback before we see that next push towards 135. Dollar yen. So dollar yen continues to adhere to a broader range over the past several weeks, with rallies being very well capped above 114. Most recently, the market stalled out above 114 at 114.50 ahead of this latest pullback, which could open the door for a retest of the 2017 low just ahead of 108. We did see a bit of a bounce this week, but again, while the market holds below 114, there's risk that any bounces are very well capped in favor of a lower top and fresh downside extension back towards that 2017 low. Euro Swiss. So Euro Swiss has been a market that's been really on the move over the past several days. The market has broken above recently psychological barriers at 110 and then critical resistance at 112 that had been that high from 2016. And now the market, since pushing up above 112, is at its highest levels since January 2015 when we saw that massive collapse in the Euro Swiss rate. There's no real resistance in this market between here and 120, but at the same time, technical studies here are highly overextended. The daily RSI reading above 80, which does suggest that we could soon see a top of some form on a short-term basis in favor of a corrective decline that could take the market back down towards previous resistance, now turned support in the 112 area before it considers continuing with this newly adopted uptrend in Euro Swiss. Aussie dollar. So Aussie has recently put in a 2017 and plus 2-year high above 80, but since last week when we saw that high, the market has been more comfortable pulling back a little bit and consolidating. There is risk building that the market could see a bit more weakness now going forward as it looks to potentially roll over, and this setbacks now would be viewed as a corrective setback following this bullish move that we had seen in recent days. But again, there is risk that we do see a bit more of a corrective pullback in the sessions ahead. Look for a close back below recent support, which comes in around 79.37. That's the low from the 28th of July to strengthen that outlook and open the door for those setbacks. Dollar CAD. So dollar CAD has clearly been under a lot of pressure over the past several weeks. Since May, the market has been dropping from those 2017 highs down to 2017 lows at 24.14, taking out the 2016 base at 24.40 along the way. And so this leaves the market very extended to the downside, and we finally started to see a little bit of a push higher as the market looks to unwind from some severely oversold readings. The breakout that we saw on Wednesday back above highs around 25.75 recent highs does set up the possibility now for a continuation of gains up towards 128 over the coming sessions. Again, the pressure does remain on the downside given the breakdown that we saw below 130, but there is room for a correction up towards 128, and at that point we'll need to reassess where things are looking. But certainly now this breakout to the top side on a very short-term basis is opening the door for a more significant correction higher up towards 128. Kiwi dollar. So the New Zealand dollar has recently topped at 75.58. That was last week. The market put in a fresh 2017 high, also taking out critical barriers at 75 and also trading up to a plus 2-year high. But since then, the market has deferred to a period of correction, which could still extend some more if the market closes below 74. A daily close below 74 would open the door for a move back down towards the 72 area before the market considers its next move. SPX 500. The S&P 500 recently traded up in the previous week to a fresh record high. This is an uptrend that's been in place for several years now, but the market finally traded up towards a measured move extension that we had been highlighting for several weeks following that breakout earlier this year above 2400 and that consolidation that we had seen between 2400 and 2320. And so now that that level has been reached, there is risk for a pullback of some form, but we would need to see a breakdown and a daily close below some recent support around 24.58 to strengthen that outlook. Gold. So gold has showing signs of stalling out a little bit in recent trade, but overall on a medium to longer term basis, the market has been very well supported on dips over the past several months and now has been very well supported ahead of 1200, which does suggest that the market could be poised for fresh upside beyond the 2017 high at 1296, exposing the 2016 peak at 1375 further up. If we do see setbacks in the sessions ahead, they'll be looking for a higher low somewhere well ahead of 1200 in anticipation of that next upside extension. Only back below 1200 would compromise this constructive outlook for gold.